I'm back here with Defying Finance. I wanted to talk a little bit about gold. You're hearing about it in the news right now a little bit. Just kind of what happened today with it. It had a pretty great run. I think its low point today was around. We could pull it up on here, about $2,008, somewhere around there. Let's pull it up by minute. Actually, let's just do a daily. But anyway, it was somewhere around $2,008. It had ran up to around 2,076. Let's pull up. Look at this. This is awesome. If you own gold, I don't know how long this lasts in the short run, but we blew, right past our old highs here in 2011, just in the short term. You can see my purple line where, I expect it to run over the long term. So again, we'll have to see. This is only happening really because people are, running to safety. But we're hitting our resistance point right here of our old high. We are about to break that. So we hit that point earlier on in the day and got slapped back down. I wonder if we can go to just a minute chart to take a look at it here. Let's bring this up so we can kind of see what was going on. You can see early in the morning, this is mostly in the futures market here. We started off around that 2020 or so, back and forth, and just someone came in and was buying really heavy. Then everything was sold off really hard. You could see a trend here of where it was heading today. That's pretty clear which way we're going. What you have to be careful with in the gold market, unfortunately, it's sort of manipulated, right? Because you have paper gold, paper silver, where they're futures contracts. Basically, people saying, "Yeah, I'll sell you this much gold we expect to have in the future at X price." And there's paper gold, and you can look up the different ratios online, different ideas that people have. But some say it's 10 to 1, some say it's 50 to 1 of the actual real gold that's even there, right? So, unfortunately, this can manipulate the price of gold and silver, and it does affect the spot market. But the reality is, what happened in 2020 was people started taking delivery of gold, right? So, typically, people get these contracts in the futures market, and they never really take their gold, right? They just kind of roll this contract over and roll the contract over. Nobody really takes hold of that gold. Well, in the futures market, there is a thing you got to be careful of where they can actually settle with you in cash. They don't have to give you that physical gold. So I think what we're going to see here in the future, assuming they don't get away with this, continue to get away with this at least, I think what we'll see in the future is more people during panic of war will want to take ownership of that gold, or more companies might be buying it. Apple could come in and buy it, right? Because you have to use gold in computers, and the computer I'm recording this on, and my microphone, your screens, your cars. It's in all kinds of stuff, right? Same thing with silver. It's an industrial commodity. It's used in all kinds of stuff. Both of these are used in medical procedures. Jewelry isn't technically necessary, but people are still going to own it, and other countries around the world too. So it's a worldwide market, but it is manipulated by the paper world, unfortunately. But I think someday that's going to change here real quick when people find out there is no physical gold behind this paper here. But just looking at it today, it had a pretty wide swing from around 2008 at the low going to 2076 at its high point, right around there, 2070 or so, right near its high. Again, I think this will be a trend that will continue. I don't think it's going to continue at this rate. Again, I think we're only seeing this because there's a potential war. And when there's panic in the market, there's only two things major companies can run to. You got treasuries and you got physical gold, right? So last time in 2008, running up to that point, it was kind of a play that people ran to, but eventually it had its sell off. during the 2008 crisis, but then you could see the run right here up to 2011. And then it peaked. And of course, it should have been climbing this whole time, but people had lost faith in gold, thinking, this is a barbarous relic. It ain't going anywhere. They're printing all this money. It should have been going up this whole time, which is true. It should have been going up. But again, it's a manipulated market. And in my opinion, that's manipulation. If you can create these contracts out of thin air and you're just going to roll these over, but there's nothing really behind it, then that's a problem, right? So what I play in would be something like PSLV. Now you can go look this up. Sprott is the trust or the company that manages this trust. This is a physically backed trust. And what's great about this is you can look at the assets under management. If you just go to their website, they'll tell you what the dollar amount, the value of the silver they actually have stored. And you can buy these at discounts. Sometimes you have to pay a premium, depends on what's happening, which I should have looked something up actually now that I'm thinking about this, making this video, but I don't think I could switch screens in TradingView as I'm recording this. But if you look at, let's say the gold, let's go to gold, that's silver. Let's go to the gold chart here. So this is a physically backed Sprott chart of gold. Okay, so this gives you the ability to buy gold bars, right, in a share of stock, and you don't have to take physical ownership or anything, but there's real gold behind it. This is all audited by a third party. This is a very well-trusted company. I think there's over $4 billion in gold, just in the value, the assets under management for gold alone. And right now, it's selling at a 1.86% discount, meaning that let's say Sprott had loaded up on gold at, let's say around this point here. Then gold had fallen down below that point. Well, they don't just go sell that gold, right? They're, at least not yet. They would have to maybe if it went falling through the floor, some of it. But if they had bought around here and now the price is down here, well, they still have this gold. You're still buying a share of that gold at a discount, which is great because when you go to buy physical gold, most of the time you're paying a premium. And the smaller the ounce of gold, or it's like a half ounce or a quarter ounce of gold, you pay a premium for that. You might be paying $100 premium on an American Eagle or something, right? So this gives you quick access into the paper world, but truly physical backed paper that's liquid. You can sell it on the market quick. You can roll into other stocks. Maybe your play is you want to get out of Netflix or something, right? So you're selling some NASDAQ stocks. You want to get into gold and silver and palladium, these types of things, just for the time being as things are getting a little crazy. You can actually sell out, roll into something like this, ride it up as your other stocks are going down, and then eventually you sell out of here and you buy those stocks on the dips or on a crash, right? So again, I don't know how long this is going to survive, but being that we're heading into potentially a major war, this can absolutely explode, right? So if we look at the silver side of this, now silver, I mean, let's just look at, I don't have I'll get to these. I only got about 7 more minutes here. But silver is still 50% or so off of its high, right? So this is still a killer buy. And it's an industrial metal, right? So you can see, at least according to Sprott's price, it's not per physical ounce here. You can buy less than an ounce based on the shares you get, but you can see where it was before back in this period of 2011, right? $23. You're still way below this. So I think silver is going to have a really great run over the next 10 years. I mean, you use this in solar panels, all kinds of junk. So I think this will have a great run. And again, another great play, that is actually a 2.46% discount right now, buying that paper that's backed by real physical silver. Now, a lot of people, this is a more liquid market here, GLD and SLV. Now, these are claimed to be physically backed, but they've had issues in the past. Go look it up online for yourself. For a short-term trade, if I was going to just liquidate and be in there for a couple weeks or a month or something, I'm probably not too concerned. I'm going to roll back into my stocks, but with GLD and SLV, I wouldn't trust it for the long term. I really don't want to trust it during a wartime. I'm afraid that gold or silver isn't really going to be there. Um, so I would be kind of worried about that. I would trust Sprott much, much more over GLD and SLV. They've had issues in the past. So definitely research that if you're going to get involved there. Not a huge fan or trader in the, palladium markets. This stuff, it is used, so that's up to you. But here's another Sprott chart of platinum and palladium. Also, you can actually get, I think I have it here, you can get a gold silver trust where basically you have ownership in gold and silver. You have to look up the percentages on their website of what the weighting is to that. But if you just wanted to buy, one paper backed gold and silver, without buying, this one and this one. If you don't want to do both, you can just buy into this. I prefer doing both, but that's up to you. Anyway, even that's at a discount, 2.45% right now. So, I mean, these are great buys. I should have looked up the price of silver, what their discounts are at right now to buy like a silver ounce. I know I was selling some earlier on in the last year because silver was about $25 an ounce or something like that. But the premium on real silver, if you wanted to touch that silver, I had some since 2009, right? So I started selling some of that because I could sell it for $40, $44 because you couldn't get the physical silver anyway, which tells you the price should have been much, much higher. So there's a whole different world out there. That's why a lot of times that paper silver, it's not realistic. Now I'm not talking about, this side of it. The spot price is controlled by the futures market. And when they create this, these paper contracts that they're supposed to fulfill, unfortunately, it beats down the spot price. But if you want to get your hands on real physical gold or silver, you're going to pay a heck of a lot more. And that tells you what the reality is. So someday I think that's going to collapse. So I wouldn't want to be holding on to gold futures or something, or holding on to GLD or SLV. I'd be afraid, they wouldn't pay me out. So something else I pointed out in the past, the Dow gold ratio. So this is another great way to look at something and just get a different perspective. I've followed this for a long time. You can also look up stuff like the Dow oil ratio. And a lot of times you'll see like, oh, look, like the market's going up. This is great. But really it's crashing when you price it in oil. You price it in wheat. You price it in sugar. You price it in gold or silver or whatever, right? So it's deceptive. And when you're heading into a time of inflation, you're going to see stocks continue to climb, I believe, nominally, but they're actually crashing next to real goods or services, right? So you could see right here, let's look at some of the percentages. So the Dow, let's say, I haven't looked at the Dow today, but let's say it's down 15% or something. Well, price it in gold, it's down almost 26%, right, since August of 2021. Even more if we go back to September 2018. So really, the Dow is crashing faster and gold's just getting started. And again, I think we're going to visit this about 6 ounces of gold to buy the Dow. Now, whether gold skyrockets to meet the Dow or the Dow falls, or maybe gold goes up, the Dow goes down, and they kind of meet in the middle. I don't know, but I think we're going to see this 6 ratio very realistically. And you can watch my other video I talked about on that. But anyway, it's been 15 minutes almost. It cuts off at 15 on TradingView. That's where I'm recording this. Make sure to comment. There's other people on one of these videos. They were asking questions, and a lot of you guys out there can answer these questions. I can't do it all, but make sure you like this, share it, and if this is popping up on another social media place, watch an ad, eventually it will support this free content that's out there. But anyway, thanks for watching.